From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 19th, 2016. In just a moment, we'll be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. But first, just a recap of yesterday's trading. With the bank holiday in the U.S. yesterday, we had very little or no market movement really to speak of during the U.S. trading session. So there really wasn't any really solid opportunities to get into the market yesterday. So no trades were taken during the U.S. trading session yesterday. Coming back into the market today, we do have a couple of opportunities that are presenting themselves, and we'll start here with the AUD-USD, Australian versus the US dollar. We're looking at the weekly time frame first. It's important to get a long-term perspective for the currency pair before you dig down into the smaller time frames and find trading opportunities. Here we have the long-term downtrend. There's nothing new about that. We've been discussing that for weeks and months. We have this triangle pattern. Now, it's maybe a little bit hard to see down here. Let me take this off. A little bit hard to see between the red trend lines. We've studied that over the past several months. Let's go ahead and zoom it in a couple of times here on the weekly time frame. There's that red triangle pattern. You can see the market bouncing around in there. We broke through the bottom of it a couple of weeks ago. What's most important is you look back here to the left, a multi-year low, or the last multi-year low that we saw here into the 6,900 level, where the market found support and then went into this contraction or consolidation pattern, the triangle pattern. So the last support, that's what's most important right now. You see 1 week, 2 weeks, 3 weeks, 4 weeks back here on the left finding support. Well, now that we're underneath there, that same support now helps us identify resistance. Once the market breaks through there, that becomes a resistance level for the market. So we're back underneath the 69.20 to 69.40 level, which is that yellow shaded area, which was that last resistance, now offering us which was support, now offering us some resistance here into the market. Let's go ahead and dig down to the daily time frame here and zoom it out a little bit so we can see again. There's that last support low here. You see a couple of days supporting into that same low. So again, the yellow shaded area historically was a multi-year low. Now we're looking at it, and even in the most recent week, we saw support into that yellow zone. Now we're underneath it. We've seen the open and close underneath it. We're coming back to challenge it as resistance. So this becomes an opportunity, not only to trade the direction of the long-term weekly trend, the short-term daily trend, and the momentum that we've seen over the past 2 weeks here for the Australian dollar. Not only is it an opportunity to trade in that direction into the resistance zone, but we can see that it's a low-risk opportunity. The risk, of course, is that if it breaks above here, we likely look for it to go back up again for the Australian dollar. So what I'm looking for today, and I'm already in the sell, as you can see here, a sell into the yellow shaded area and targeting back down towards the blue shaded area, and the possibility of a return of the downtrend. Let's go ahead and zoom it in one time here. You can see right there into the 69.20 to 40 level. I'm right in the middle of there. Bring up my trade window again. There is the sell, 69.32. Actually, it got 32 rather than 30. But right there into the yellow shaded area. These supports offering us a clue to resistance. We've seen the open and close underneath it. Gives us a clue to the breakout, rally, retest. Now we're looking for the next fall down to the blue zone. A break of the blue zone, of course, we would look for further movement down here for the Australian dollar. The risk, pretty apparent and pretty clear. If it breaks back above the yellow shaded area, it's likely going back up here to the pink zone. So we don't want to be in it that long. So a 40, 45, maybe a 50 pip stop loss above the entry, which if you're in at 69.30, that puts a stop loss somewhere around 69.80. I'm using the trade manager with a 45 pip absolute max loss. The trade manager available for members on the members site for the Prodigy program. So you could use a tool like that or just manually follow it. Your stop loss, again, 45, 50, 55 pips for the trade, looking for it to head back down towards the blue shaded area today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.